Hi there, welcome to Kneppy Invest. I want to do a technical analysis every single week, and that would have been done yesterday on the 28th of August. But I thought I'd just delay that by one day because we had a really interesting night on the American markets on the Friday, night for us, but day for them. And the Nasdaq was down about 4%, and this was on the back of some comments from Powell, the Fed chair, and I sort of understand why the market is down, but I still don't understand the reasons behind it. For instance, here's just an article. Federal Reserve's inflation fight could bring pain and job losses, warns Powell. So I think the market is expecting the Fed not to be raising interest rates much further from here. And he's saying, yes, they're going to keep fighting inflation. They've got to keep raising interest rates until they know that inflation is under control. And if that has a negative effect on the economy, that's how it's going to play out. Now, the reason why this doesn't quite gel with me and why I don't understand why the market was so down is because if you know anything about the Fed mandates, and I do actually have a link here. So the Fed in America has two mandates, and they're looking for maximum employment and price stability. And right now, they have maximum employment or near enough to maximum employment. So really, the only thing they're concerned about right now is price stability. And price stability means that inflation remains low and stable over the long run. So right now, we have high inflation. That is not price stability. So the sole focus of the Fed in America right now is about keeping inflation in check, decreasing inflation, and the best way to do that, in their opinion, their best weapon is to lower interest rates. So I don't really quite understand why the market is so not keen, but why the market thinks the Fed all of a sudden is going to pivot and start lowering interest rates because inflation is still high at 8.5%. Now, a few weeks ago, inflation came down a little bit less than expected, but still it's 8.5%. I think over the next year, we might see inflation come back, but whenever the inflation is going to be above 3 to 4%, the Fed will be fighting inflation by keeping interest rates high or even raising interest rates over the next few months, maybe next 6 months, even the next year. Now, this whole transitory thing they've been talking about 1 year ago, I'm not sure what's going to be happening with inflation the next year because with maximum employment, there is going to be wage pressure as well. And wage pressures also lead to inflation. So the ultimate goal for the Fed and for central banks around the world, including the Reserve Bank in Australia, is to have maximum employment and also low inflation, not negative inflation or deflation, but that's what they want, is that maximum employment, low inflation. That is absolute ideal situation for all countries, all central banks around the world. So anyway, the Nasdaq had a bit of a hissy fit on what day was it? It was the Friday, and if we just have a look at the chart, the Nasdaq. No, that's the wrong one. We'll go to the markets here. The Nasdaq, and all the markets were down big. Here it is. Big down day on the Nasdaq, 4.1%. Even the Dow Jones was down 3%. S&P down 3.4%. Gold was down. Bitcoin was down. Ethereum was down. Everything was down on the Friday. And more than likely, what we're going to see in Australia down today is a fairly big down on open. I probably would expect it to be down about 1.5% after the first 10 minutes. So when trading begins on the ASX, don't forget, all companies don't trade at exactly the same time. There is a rollout of when companies start trading. So for companies that have a TIG code that start with A, including A2 Milk, and A2 Milk is going to be quite obvious why I said them, they start trading almost immediately. But companies with the TIG code towards the end, for instance, Zero, what's Zero's XRO, they'll start trading towards the end of that first 10 minutes. So about 10 o'clock, or 10 minutes past 10, or maybe 8 minutes past 10, something like that. So there is that in place as well. So we won't see the market down really big on open, but after 10 minutes, we'll have idea of where the ASX or the XGO XSO has opened for the day. And I do expect it to be open quite big, down quite a bit after about 10 minutes. And then after that, who knows? Who knows what the sentiment of the market's going to be? If there's a lot of negative sentiment in the market and the market actually expects the American markets to be down pretty big tonight, we could see the markets, Australian markets, fall all day, maybe be down 2%, 2.5% at the end of the day. But if the market is actually expecting a little bit of a rebound on the American markets, we actually could see the Australian markets actually rise during the day. So I'm not sure what's going to happen. No one knows what's going to happen. And the best way to look at it is just to follow the trading all day. I don't do that. I don't care about intraday trading at all. So anyway, what I'm going to do today, and this is a technical analysis video, I am going to look at some charts for some companies today, and I am actually going to include or increase the amount of companies I'm going to look at today based off announcements that have been released so far today. I've already drawn up a bit of a watch list here, not a watch list, but a hit list of companies I want to look at. Now, the first company that released their financial results today was A2 Milk. And I just had a look at the New Zealand Stock Exchange, because A2 Milk is traded on New Zealand because it is a New Zealand company and is up 6.4%. So straight away, we know, without even looking at A2 Milk results, that it is good results. The market does like A2 Milk results. In fact, the best gaining company on the New York Stock Exchange is Michael Hill Jewelers. And funnily enough, Michael Hill Jewelers released their results just after A2 Milk. So it does look like two companies that released really good results, Michael Hill and A2 Milk, have released their results early. Now, if we have a quick look, let's open up A2 Milk just to see what their results are like. Now, the other interesting thing I noticed here is A2 Milk is doing a share buyback of up to 150 million New Zealand dollars. So that's a sign that management does think A2 Milk right now is undervalued. So when a company has a lot of cash on hand, and A2 Milk has a lot of cash on hand, there's a lot of things they can do with that cash on hand. Dividends, research and development, maybe producing a different sort of milk. Maybe that's what they could do. Acquisitions or a share buyback. And A2 Milk have decided to go down the share buyback route. And actually, that is understandable when the valuation of a company is lower than probably it should be. And I think A2 Milk might be at that position right now simply because the amount of negative sentiment in regards to that company. So they have announced that share buyback, and based off these results, so it does actually look interesting right now. So revenue growth of 20% from last year, earnings or EBITDA up 59%, EBITDA to sales margin increased to 13.6%, profit after tax up 42.3% to 114.7 million. And they've also mentioned here positive outlook for financial year 23 with high single-digit revenue growth and EBITDA margin improvement expected. So that probably would mean net profit after tax might be in double digits. So based off this, based off the reaction in New Zealand, we should expect A2 Milk share price to increase today. And that is one of the companies chart I'm going to actually look at today. Michael Hill's Jewelers, based off the reaction in New Zealand, that's a pretty good probably pretty good result. Now, another interesting one here is Vista Group. Vista Group has updated their revenue guidance on box office growth. So this is a company I've been following for a long time, just because I like what they do. Upgrades revenue guidance as box office growth continues. They just mentioned here, upgrades its revenue guidance to between 123 and 128 million because of increased interest in people going to the cinema. I am not one of those people. I can't remember the last time I've gone to the cinema. I don't like going to the cinema because people are really loud when they eat popcorn, that sort of thing. In fact, if I do go to cinema, I prefer to go early in the morning, not early in the morning, but like the first session, 10 a.m. on, say, a Wednesday or Thursday when there's going to be no one else in the cinema, because I just don't like watching movies with other people. But that's just me. I also have, I think there's also a possibility that people going to the cinema in the future will decrease particularly when home theatre systems improve out of sight. And I think that will keep improving over time. But I do understand that a lot of people just go to the cinema because they think, or they like to share the experience of watching movies with other people. Again, I'm not one of those people, but Vista Group is on my watch list right now. Some other companies that have released their half-year or full-year results include Johns Lyng Group. Now, I'll go through this announcement or this results over the next few days, but on first look, these are pretty good. Sales revenue up 57.5%, EBITDA up 59%, profit after tax up 40%. Now, they have made a significant acquisition, so I'd like to see how that acquisition has affected their results. So it's not all organic growth. Mineral Resources, I think, did release Symbio Group. Who else? Objective have released, I've just wrote this down here. Objective have released their results. Australia Broadband, Aussie Broadband have released their results. Adore Beauty released their results. Trying to find Aussie Broadband or somewhere here. Macmillan Shakespeare Phoenix have released their results. Profits, about $50 million in profits, if I remember correctly. $50 million of profits for a company with a market cap of $185.7 million. $50 million of profit. The Vista Group have released their results. These should be pretty good. Haven't looked at these results just yet. Hopefully these are good. Revenue up 56%. Profit up 110%. Dividend 19 cents. Up 19 cents to 37 cents. So really good results from the Vista. That probably was better than I would have expected. What else do we have here? Appium Animal, Kina Securities. A company I really want to look at a little bit more in the future is Cronus Australia. They're still releasing Appendix 4Cs, but I would expect these results to be pretty good because I was just pretty surprised by how good their Appendix 4C is. So revenue up 208.5%, profitable. In fact, their profits looks like $8.1 million, up 327%. That company does or needs a closer look, in my opinion. Max 7, did I mention Macmillan Shakespeare? Austin Engineering, that's another interesting one because their share price has broken out, it looks like. Revenue only up 2%, but profit up 525% to 20.6 million, EBITDA up 155%. So some interesting results. Fortescue Metals, Swoop, being released here. AVA Risk Group, I won't look at them now. Tyro Payments, GLG. So all this before 9 a.m. I'm recording this video at 9:45 a.m. So a lot to get through. I'm really happy today is the 29th of August, only a few more days of financial results, because by the last few days I get a little bit tired of going through all these results, and I'm going to go through looking at these results a bit closer over the next 3 or 4 weeks because so many results are being released. I did hear the other day that Japan make their companies release all their results on the one day. That's absolutely ridiculous. So lots to go through here. I'm trying to see if there's any other Pro Medicus signs 3 new contracts renews Florida, so that's no results. And really nothing else here. That SOP, nothing. Nitro Software, but they're unprofitable. Hillgrove Resources, I'm interested in that company as well. So that's till 9:30 a.m. when I started recording this video. So let's have a look at the charts. Let's have a look at technical analysis. Now, the first company I've got here is Phoenix. Now, they have $50 million in profits, market cap of 185 billion. So that means their price to earnings ratio is just above 3. And the share price looks like it could be moving up. Now, share price of Phoenix Resources is going to be highly dependent on iron ore prices moving forward. But even then, with the cost of getting the iron ore out of the ground coming down, Phoenix, I think, is really cheap at these prices, even though share price is at 34 cents. If the share price gets above 35 cents, that would mean a 1-year high in this company's share price. Another company I follow quite closely is Catapult. This is a sort of company you probably don't hold for the long term because the share price is quite volatile. If we look at the weekly chart here, you can just see the volatility of the share price. There are certain times when this company is hyped to the max, and that was back in 2016. Share price went to a high of about $4.40. During the times when the share price or the company is hyped to the min, and I'll just decrease my camera here, when this company is decreased or the hype in this company is at the minimum, say back in 2019 during the COVID-19 financial panic, and then recently share price gets below $1, that's the time to take a position in this company if you are excited about the long-term future. Even then, I think this is just a short-term to medium-term hold. Pro Medicus share price looks like it's trying to move up. Market cap of this company is 5.6 billion. Price to earnings ratio 124. So again, this is a sort of company where you do have to pay for high quality. This is a very high quality company. Appen. Well, I've included Appen in this list because the share price is at a multi-year low, and it just went through some support right at. If we just zoom in here, that support level is that horizontal line. On the last trading day, it's moved through that. I expect significant weakness in Appen's share price today. I expect this to move closer to $3. If we look at the long-term chart with Appen, the last time the share price was this low was way back in 2017. I do expect the share price to move to $3, possibly even lower. Lots of negative sentiment, not only in the business, but also the chart here. So sometimes when you have a business not really performing, you can just see what happens with the share price. Market cap of Appen right now, $480 million. So if we go back to end of 2020, the share price was about $44. That means the market cap back then was almost $5 billion. So unless this company can start turning things around, and this is definitely not the sort of company you probably now own for the long term, simply because their customers are really paring back on spending in this area. Another company that released their full-year results, and we saw a very negative reaction, was ServiceStream. So it looked like the market or the share price of the company was trying to break out. If the share price got about above $1.08, that would have been very positive. But then the company released their full-year results, and they weren't good. Share price decreased 17% on that day, and then a further 4% the next day. Almost 1% the next day, and then 3.8% the day after. So really bad week for ServiceStream, and then the share price is moving towards the lows we saw back in September last year, in February of this year. So the share price gets below about what price is that? My camera is in the way. Gets below 75 cents, that will be negative, very negative, and the share price right now is 78 cents for ServiceStream. So a bad report. You can just see what happens when a company does release a bad report. It can drive or be the catalyst for these changes of sentiment and the shift in the shares of a company trading from, say, neutral trend or positive trend to a downtrend. That's what's happened with ServiceStream. Another company that released sort of a negative results was Codan. Looked like this share price of this company was trying to break out, but it didn't. They released their half-year or full-year results, and the share price took another plunge. So this possible breakout and shift in the trend of the share price came to an end. I mentioned Austin Engineering. I included Austin Engineering in this video before they released their full-year results. You can just see the breakout in the share price. The last 4 trading days, share price went from 28 cents to 34.5 cents. And if you look at the weekly chart for this company, share price now is at a multi-year high. So we're talking about last time share price was this high was 2015, 7-year high for this company. So definitely possible buy just because of the breakout in that share price. The market is liking this company. Markup of 200.7 million. So not a high markup, particularly when you look at the past. Monadelphous is another company. I'm not sure if they've released their results. I think they have. Another company which looks like the share price is breaking out. Share price is not at a multi-year high, but just a 1.5-year high with that company. Last time we saw the share price at $13.21 was back at the start of 2021. IFL, which is the old Insignia and Financial, the old IOOF. That share price looks like it's breaking out. When you look at the daily chart, not the weekly chart, looks like it is potentially breaking out. I would like to see it get above about $3.95, $4, If it does that, that would be a 1 year high or almost a 1 year high. EHL, I don't know much about Emico. Looks like that company share price is breaking out. The share price has really taken off over the last few months. So another company I'll probably have a closer look at. Market $483 million. Doesn't look like it's profitable because it has a dividend yield of 2.7%. And the last two companies I've included in this list just because they released their full year results is A2 Milk. Now, when you look at the chart, nothing exciting happening. In fact, the share price has rebounded off lows. The multi-year low for this company was in May at $3.90. Share price has rebounded to $4.91. Wouldn't say share price is in an uptrend right now, but I'd probably say share price is trying to consolidate. I would expect at least the share price to rise about 5% on open today. And since we are moving towards open, I might just stick around for another 5 minutes because the current time is 9:55 and share price $4.91. Hopefully, the share price can get up to about $49 or $5.50. If it does, that would be at about a 5-month high in the share price. If the share price gets above, say, $5 or $6, that would be a well, actually, no. Last time the share price was $6 was actually back in November of last year. So still a long way this share price of this company can rally. I think, this is just my opinion, these results could be the catalyst for a shift in sentiment for this company. Now could be the time to take a position in this company. If you are thinking there is some long-term viability for this company, and I think that's debatable in my opinion. So that's A2 Milk. So I'll just stick around to see where that share price of that company opens. VGL, there's that company that upgraded their guidance, their revenue guidance. If you look at the weekly chart for Vista Group, share price has been significantly higher in the past. So if you go to pre-COVID-19, share price reached a high of $5.60. So the share price of this company is well lower than that. But the weakness in the share price of this group, Vista Group, actually began before COVID-19. In fact, it began in, say, August of 2019. In that 1 week, the share price dropped 26.5%. So that would have been around their financial year 2019 results. When you see that significant drop in August or February, it's because of results. Another company I'd like to look at is MHG, Michael Hill Group. Another one is Vista Group, Vista Group, and the other one was Cronus. Objective released their results today. JLG, Johns Lynn's Group, and Aussie Broadband. So I'll go back to the chart, actually this, and just see if any other companies have released the results in the last 27 minutes. So I'll just do this over the next 3 minutes or so. Booktopia have released their results. That's going to be interesting to see how they've done, simply because the share price has been absolutely hammered. Their CEO, what's his name? Tony Nash. He's gone. So maybe a new CEO. And I just don't like CommSec how long it can take to open up some of these results. So I'll just get rid of that. Come on, open up. Let's have a look. Anything else interesting? Mineral Resources presentation. Motorcycle Holdings Group. Auswide Bank have released their results. APM Human Services, I have no idea who that is. Lark Distilling has released their results. BWX has gone into a trading halt, looks like. I wonder what that's about. Let's have a look. I'll open up Lark Distilling, but I won't have a look at their preliminary reports, just the highlights. So Booktopia chairman, acting CEO is Jeff Stalley, and their results, revenue up 7.6%. So one of the things I am looking for is increasing in revenue. So at least Booktopia have increased their revenue, but everything else looks not that flash. Underlying EBITDA down 54%. I'll have a closer look at a Booktopia later. I'll just close this slide. Not slide, but Jackson Hole latest, inflation likely to be high for a while. This is from IMF's Jita Gopinath. So the expectations now is among some people, including the IMF, that inflation is going to remain quite elevated. And they've just mentioned here by Jita, the economic priority is to bring down inflation and not prematurely loosen policy. And that's one of the reasons why the Fed is so interested in maintaining high interest rates or elevated interest rates. compared to what we've seen over the past few years, and possibly even increase interest rates over the next 3 to 6 months. So close that down, close down that. Let's just refresh this one. New Zealand Stock Exchange. Michael Hill's Jewelers still up 9.4% or 5%. And A2 Milk with a ticker code ATM on the New Zealand. Why do I keep saying New York? New Zealand Stock Exchange is still up 6.2%. Down 9% is BFG. I have no idea who BFG is. It is Burger Fuel Group. No idea who Burger Fuel Group is. Lark Distilling. This should be good. Net sales up quite a bit. Shouldn't be profitable. Normalized EBITDA of 1.4 million. I would not expect Lark to be profitable just yet. That's definitely going to be in their future, though. This company, particularly if they can build on their brand, if they can really sell this company's brand of selling high-quality whiskey around the world, I think this company has a significant future ahead for them. Possibly. That's just a possibility in my opinion. So the market has opened. So let's have a look. I'll just open a new one. Market has opened. Companies are down. So I've got a group portfolio here. So the market is already down 0.4%. So that's for those companies. You just see here group portfolio. So BrainChip is down 4.8%. A2 Milk up 6.1%. We expected that based off what happened with New Zealand. Based off these results, I think they were better than expected. But all these other companies that have opened are down fairly big. BHP is down 1%. Alcidion down 3.4%. Arctis is down 2.9%. BlueScope Steel down 2.8%. You notice all the ticker codes for these companies are the ones like A's and B's. So those are the companies that are open right now. Not Kogan is still to open, Megaport still to open, Lake Resources, even CSL still to open. We're going to see these companies open as they may move through the rest of the morning. So A2 Milk is up 6%. The other one is Aussie Broadband. Just to see, they're down 8.6%. So again, even though I had a quick look at Aussie Broadband, I thought they were pretty good results. The market did not like these results from Aussie Broadband. I think the market is overreacting at this moment with this company. The valuation of this company is well lower than I think it should be, 746 million. If we do take a look at their results here, just look at the results announcement. Revenue up 56%, record EBITDA up 107% to 39.4 million. Broadband connections up a lot. Everything's going really well for this company, but still the market is unimpressed. I think maybe the market thinks this company is still overvalued if you look at the short term. But if you look at the next 5 years or so, I probably would argue that this company has a lot of value in it still right now. So let's go back to A2 Milk, just see how it's going. Up 5.5%. So the initial hype has not really passed because it opened at $5.19, reached a high of $5.24. So it'd be interesting just to see how the shares of this company trades through the next few days. If the market wasn't going to be down big today, more than likely A2 Milk would have been up about 10%. That's just my opinion. And already the XGO is down 0.74%. So if we go to the group portfolio, it looks like CSL down 1%. Email payments down 5%. So other companies now have opened. Dusk down 1.8, Fortescue down 1.3. There was that other company I wanted to look at. So some of the other companies I'll have a look at. JLG, John Lynn's Group. Just want to see, down small. This is indicative price. So share price hasn't opened yet. But based off the auction, if it opened right now, John Lynn's Group would be only down 0.7%. Michael Hill's Jewelers, this should open higher because we already know it's open higher in New Zealand and indicated price is up 7.3%. The one I'm really interested in is Vista. Those results look pretty good. Indicated price up 6%. Those results on first look looked really, really good. Objective, I had a very close look at Objective before I started recording this video, and the results for Objective looked about what I would have expected. And indicated price is 0%. So that shows you probably the market or the results were a little bit better than expected. And the last one is Cronus Group, up 1.45%. That is a company I want to do a little bit more research on, simply because I haven't done any research on the company before. And their June quarter results Appendix 4C looked really interesting, and these results look interesting as well. And Vista Group, because they have the start of their name is V, so they should open within the next 5 minutes. Indicative price up 3.9%. And you should expect that when a company increases their guidance. The other thing I actually did write down for Aussie Broadband, they actually mentioned in their guidance or their results that their results actually exceeded guidance. So usually when a company exceeds guidance, the share price should actually increase upon release. But the share price of Aussie Broadband is down 10.5%. This could be based off guidance. If a company releases any financial year 23 guidance and that guidance is underwhelming, that's why share price might decrease as well. So I'm going to have a closer look at Aussie Broadband results after I stop recording this video. And the XJ right now is down 0.6%. Now down 1.01%. So I do expect the market, the XJ, to be down about 1.5%. When all companies are starting to trade. So we're heading towards that direction. A2 Milk is holding firm, up 5.91%. Megaport down 9%. Not surprising based off what we saw overseas in the tech sector. What's another tech company? BTH. Look at BTH. That's opened. Down 6.8%. Xero hasn't opened yet. Another tech company, indicative open, down 5%. What's another company? I really want our team to be down big, only down 2.96%. I want that to be down 20%. That would have been awesome. And WiseTech down, indicative price down 4.7%. REA Group is another company I'm looking to take a purchase in, indicative price down 4%. So right now, XGO is down 1.1%, and A2 Milk, probably one of the best performers on the ASX. In fact, we can actually have a look at who is performing the best. If we go to XAO, I'm going to look at the All Ordinaries. And this is in ComSec. You look at the constituents, and then we can see which companies have performed well. So right now, Adore Beauty down 15.8%. So, of course, the market did not like those results from that company. Cettire down 9.4%. Grange down 8.5%. Lake Resources down 7.6%. Atomos down 7.5%. But if we just change that, we can see which companies have performed the best. Michael Hill Jewelers. This should have been expected based off what happened on the New Zealand Stock Exchange. Michael Hill Jewelers is up 9.3%. A2 Milk up 5.7%. Bluebet up 4.4%. So even though the overall market is down big, Levisa up 2.95%. Macmillan Shakespeare, another company that's released results, 2.2%. Booktopia up 1.9%. So the market has liked those results from that company. So is all companies opened yet? Probably not. We're getting towards 10:08. Still got Xero to open. And the XJO is down 1.5%. I probably should stop it right there because I said the market or the XJO will be down about 1.5% on open. All companies haven't opened yet. Still got Woolworths to open, Zip to open, TNT, which is Tezzeret, Soul Pattinson to open. So those companies are going to open soon. And more than likely, looks like the Australian markets will be down about 2% on open. So that's all I've got for today's video. I hope you've enjoyed it. If you like this sort of video, just leave a comment in the comment section. I can do these sort of live videos. I'm not sure if I do an absolutely live video, but no stops at all in this video today. I'm just going to just wait until all companies have opened before I completely stop recording this video. Oh, A2 Milk up 6.7%. I think this could be the inflection point for A2 Milk. This could be it. This could be the time to take a position in this company you haven't already, or add to your position if you hold some shares in A2 Milk. Now, I'm not super bullish on the very long-term future of A2 Milk, but I do think it is undervalued at current prices, or that the market is completely open now. And the market is down, let's have a look, we'll just 1.94%. So I thought down 1.5%, so a little bit worse than I expected. And it's going to be interesting to see how the XAO trade through the rest of the day, simply because there's going to be thoughts about, particularly if American markets, their futures are down, we could see further pressure on the XAO, or if the American markets, their futures start rising, we could see the Australian markets, some of these share price start to rebound. The other one I like to look at is the XSO, which is the small ordinaries, and that's down 2.9%. It's not surprising. There's going to be a lot more volatility in the smaller companies on the ASX, and a lot of these smaller companies are tech companies. So as you can see, a lot of that. Actually, we'll go back to the XAO. I just want to see which is the best performing companies right now, and more than likely it's going to be A2 Milk. Or for some reason, Michael Hill Jewelers just took a bit of a dip, but again, best performing company on the ASX right now is A2 Milk because of their results, and this should be good news for a lot of investors out there who've held the A2 Milk shares for quite a while. So more than likely, I'll do a video on A2 Milk in the next week just because of these results. So that's all it for this video. Before I leave, I just want to see, and the market is down 2%. So market is down 2%. This sort of volatility should not be surprising because, in my opinion, we're still possibly in the bear market, even though the Nasdaq has rallied or did rally 20%. That could be just a bear market rally. Again, these bear market rallies of over 20% happened in really significant bear markets. We could be in a really significant bear market. Just look at what Michael Burry has been doing. He sold out of all his stocks in his fund, except one, which was Geo, which was a company that owns private jails and mental health clinics. So he's not expecting some good times ahead. In fact, Michael Burry is expecting this downturn to be worse than 2008. So a lot of people listen to Michael Burry because he was absolutely right about the GFC. And if you don't know who Michael Burry is, just watch The Big Short, an absolutely fantastic movie that I watch at least once a year to remain humble, to understand that there are way smarter people out there than me. And because there are way smarter people out there than me, I should listen to as many people as possible to get a wide range of different variations to what might happen in the future. Because even though Michael Burry was right with regards to the housing crisis in America, he may not be right about what he's talking about right now. So that's it for this video. Have a good day. Before I close, just the XGO is only down 1.98%. If you have any thoughts, just leave it in the comment section of this video. If you like this sort of video, just leave it. Your thoughts are there. And otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.